Are you worried about reduced margins and lower growth forecasts going forward? That was a really good question I got on Baba in the comments, and in this Q&A series, that's exactly what I'm going to answer. You're watching More Money. Let's get it. All right, guys, so the biggest thing that people noted in the quarterly results for Alibaba was the fact that they are forecasting lower revenues and lower margins overall. And so what that's really signaling is that the days of 40% year-over-year revenue growth rates are over, which is why, if you guys remember in the 6-part series that I gave you on Alibaba back in like June or July of this year, I actually signaled that that was going to be the reality going forward. I always say that growth acts like an anchor to future growth. And so when we were forecasting out in our valuation for Alibaba, we actually cut that 40% in half. And so in our base case, we were actually forecasting growth in the retail sector to around 20% a year. So we already built this into our valuation. And I just want to note that I tend to be Dr. Doom a lot of the times when I'm forecasting out companies. This is largely the reason why, because there's no shortage of troubles that a company can get into. Also, guys, if you do decide to download that model, you can grab it in the description for free. I don't like putting paywalls on any of this stuff because, like, whatever, just take the research, right? You can see the way that I model. I was very conservative to begin with. Also, adding to that, I added no contribution from Ant Group. I think that the cloud business can grow faster than what I'm forecasting it at. And I think there's a lot of upside from the other businesses that we're really largely not looking at. They're small right now, but 5 years from now, they can become really big contributors, including Fresh Hippo, which is something that I'm really excited about. So yeah, overall, lower margins are something that we should be expecting for Alibaba. If you weren't modeling that into your models before, I really suggest that you do. And then let's see how this thing rolls forward going forward. But also have to look at that in conjunction with the valuation. Does the valuation reflect that, or does it overcorrect for it? And I truly believe that right now, based on the price of Alibaba being sub $140 a share, the price is overcorrected. So I still value the thing at around 300 bucks a share. So I'll leave it at that, and I'll see you guys later.